Refco was a titan in the commodities world, processing billions daily. Its 2005 IPO was a high-profile event valued at over $1 billion. Yeah, within months, Refco was a titan in the commodities world, processing billions daily. Its 2005 IPO was a high-profile event valued at over $1 billion. Yet, within months, this seemingly robust empire would crumble, exposing one of Wall Street's most audacious frauds. What forces could bring down such a dominant institution so swiftly? The answer lay squarely with CEO Philip. For years, Bennett orchestrated an elaborate scheme to conceal massive amounts of uncollectible debt owed to Refco, primarily from a single client he secretly controlled. He didn't just bend the rules, he shattered them, all to present a picture of financial health that simply didn't exist. The core of Bennett's deception involved a shell company, controlled by him, which would buy these bad debts from Refco. Crucially, this transfer always occurred just before quarterly and annual financial reporting periods. Once the books were closed and audited, the debt would quietly revert to Refco, ready for the next cycle of concealment. It was a cyclical illusion. This wasn't a small, isolated problem. By 2002, the hidden debt had swelled to over $430 million. Bennett needed help maintaining the facade. He brought in former Refco president Tony Grant, who, along with others, facilitated the transfers and manufactured the necessary paperwork to make the fictitious transactions appear legitimate, deepening the web of complicity. Even as Refco prepared for its blockbuster IPO in August 2005, the fraud was active. The prospectus, presented to investors, painted a picture of a flourishing company entirely devoid of this hidden liability. But the strain of maintaining the deception was immense. The elaborate shell game was becoming too complex, too costly, and ultimately too visible. The cracks appeared swiftly. In October 2005, a regulatory inquiry, triggered by an anonymous tip, began probing the nature of the $430 million in receivables Bennett was trying to hide. Faced with undeniable evidence, Bennett confessed to the scheme. The market reacted instantly, halting Refco's stock, and within days, the once mighty Brokerage filed for Chapter 11 bankruptcy. The fallout was immediate and severe. Investors lost hundreds of millions. Philip Bennett was indicted, pleaded guilty to fraud, and was sentenced to 16 years in prison. Tony Grant received a 10-year sentence. The collapse served as a stark reminder of the devastating potential of corporate fraud, even within seemingly bulletproof institutions. Refco's spectacular demise underscores the perpetual vulnerability of even the most established financial systems to individual avarice. It's a cautionary tale of how a culture of deception, driven by a desire to maintain appearances, can unravel an entire enterprise, leaving a trail of economic ruin and shattered trust. If the hidden machinations